Oh boy, here we go again. Back to work. Weekend is over. Hope you guys enjoyed the weekend. Hope you made some money last week. Boy, what a great week it was last week. But as we always say, back to work here Monday evening. We got Tuesday coming tomorrow. We have a lot to cover in a very important video. We got some big earnings this week. We've got an FOMC meeting this week, non-farm payrolls later this week. And I'll tell you, a lot of really great trades after those big runs higher that we saw on Thursday into Friday. So I have a lot of great trades on my radar for Tuesday. I'm going to cover all my favorite trades in the video here tonight. Then we get a game plan to make some money tomorrow. Before we jump in and get the game going tonight, I'm excited just thinking about it. Before we jump in though, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. And if you enjoyed this stuff, if you liked the video tonight, do me a favor. Will you hit that like button? I always appreciate you guys tuning in. And give me a shout out down in the comment section below. Thank you so much for stopping by, supporting the video here tonight. But enough of the intro though. Where are the best trades setting up here for Tuesday? Well, boy, looking at the charts right now, you'll notice there's a bunch of ranges on the charts here right now. We got range on the S&P, range on the Nasdaq, multiple ranges over on crude oil. We've got some big earnings tomorrow. We get some big news later on this week. From what I can tell right now, it looks like fake out breakouts, right? Failed breakouts back into these ranges. It looks like is where the easy big money be made here on Tuesday. So lots of ranges. Ranges act like magnets. We'll talk about what I mean by fake out breakouts, using those ranges as our guide today. Get a lot of great trades. We're going to go over here tonight in the video. Now, before we jump into each one of these charts, though, let's all get on the same page for tomorrow. Tomorrow, of course, is Tuesday, May the 2nd. There is some big news tomorrow morning. It may not seem like it, but we got that JOLTS report tomorrow at 10 o'clock Eastern time. The job openings, layoffs, and transfer survey has always widely been known as one of the most important jobs indicators. Remember, the Fed has made it very clear to us that they want to slow down the jobs market, right? Bring down wage growth, basically slow down the jobs market overall. So we'll definitely see if what they're doing in the Fed is having any impact on the JOLTS report tomorrow. Now, that JOLTS report tomorrow probably won't affect the FOMC announcement coming on Wednesday, but it may give us a bit of a tip of the hat, and I would imagine traders are watching that here for tomorrow. Speaking of tomorrow, too, don't forget, we do have more earnings this week. There definitely are some big names tomorrow. Uber, Pfizer, BP, Marathon. You'll see AMD, Ford. These are big names. They're not nearly as big as names that we saw last week. There are going to be some earnings, kind of a mixed bag, right? Got some technology, we got some pharma, we got some energy. There's definitely, right, automotive. So kind of a mixed bag for tomorrow. In all reality, though, you could put all of these companies in one bucket and they still won't be as important as the Apple earnings we have on Thursday. So really at this point, even though we've got some big earnings numbers coming tomorrow, it does seem like the focus has shifted right now to that FOMC announcement coming on Wednesday. We're going to come back tomorrow night and we'll talk more about kind of the FOMC announcement and how that plays into our markets. But for right now, tomorrow morning, the main focus is that 10 o'clock shock, as we call it, that JOLTS report at 10 o'clock Eastern time. We'll keep our eyes open, in the pre-market tomorrow, see if anything really surprises us out of those earnings. But it looks like right now, JOLTS tomorrow focuses on the FOMC announcement. And once we get through FOMC, then we'll start worrying about the Apple earnings coming out, which will be kind of the cherry on top of the earnings season. A side note, too, there'll be no video newsletter on Wednesday evening. So just be aware of that. I got to be out of the office for a couple meetings on Wednesday night, so no video newsletter coming on Wednesday, but I will definitely be here tomorrow and get you all ready for the FOMC announcement on Wednesday. But back to our charts, though, right? We know we've got some 10 o'clock news tomorrow. We know we got some earnings early before the open, after the close. The money is made, though, on the chart. So I'm going to go over each one of these markets, talk about my favorite trades for tomorrow. If you like making money, I would definitely make sure you watch all the way to the end, because every trade I talk about tonight can be applied to your favorite market. Let's start with the S&P. We'll go NASDAQ, and we'll wrap things up. Oh, we will, on the black gold, the crude oil, the Texas tea, S&P to finish up the video here tonight. As always, guys, these are tick charts. You can see time frames in the upper left-hand corner. That is the 21 EMA. And as always, I do include extra higher time frame charts linked up in the description of the video. I've got some 60-minute, I've got some 4-hour charts linked up down in the description. I like to use these charts to give me an overall direction bias, find some bigger levels of support and resistance. If you want to get a bit of a bigger view on the way I look at the markets, definitely check out those links down in the description of the video. Now that you know more about what you're looking at here tonight, what's the most important factor on the S&P? Really the S&P and the Nasdaq. They're both very much identical. Something I talk about tonight on the E-mini can be applied to the Nasdaq and vice versa. There are, in my eyes, there are two main factors that are affecting where I see the best trades setting up here for tomorrow. The first one is this bullish range. These are very, very common. We call these directional trading ranges. If you're a student of mine, you know how much we love these, right? They're very, very simple. Whenever we have, in this case, a bullish move into a trading range, there really are two ways to trade them. I want to find support levels below the range and look to buy off support levels underneath the range because ranges act like magnets. At the same time, we also know that as the market tries to rotate off the low, this can oftentimes create a very strong breakout, and we oftentimes see pretty juicy breakouts through the high here. So I mentioned earlier that fake out breakouts, right, or failed breakouts could be where the best easy money trades are for tomorrow. That is definitely my favorite trade for tomorrow. But in case we don't get that deep pullback, I will certainly be talking about some breakout patterns, right? Some rotational breakouts on the video. So that is definitely one kind of the most important factor. The next most important factor, which is also my mind, is we're sitting at some pretty significant highs. This is where that 60-minute chart, those 4-hour charts can really come in handy down in the description because we're at a major top right now, this 4203 area. And whenever we're at a major top like this, we're definitely bullish. We're a little too bullish to really safely sell right now, unless something really changes here. But in a bull market that runs into overhead resistance, we have to imagine that buyers, they might be a little bit hesitant, right, to be buying too high right now. You know, if I'm at resistance, you have to think that potentially a deeper pullback could be in store to simply give the buyers a little more breathing room, right, to give them a better risk-reward ratio, right, going higher. So kind of put those two together, you get a bull market into a trading range. We know that range is a magnet. We'd like to buy a pullback and go back up into that range, and we have to anticipate that pullback might be a little bit bigger than normal because we're sitting at some overhead resistance on the 4-hour and on the 60-minute. So knowing that much, right, knowing that that's what's going on in my head right now, there are ultimately 4 different ways we can buy the pullback or trade the fake out breakout below this range on the S&P and the Nasdaq. So let's go over a couple different scenarios. The general game plan is simple. I want to buy a pullback and run back up. But there's a lot of different, there's always variations of this, right? So let's game plan some ideas here. That way you're prepared for whatever the market gives us, right? Let's talk about entry patterns, all right? Now, one of the most obvious things on this chart right now is this channel. You can easily see this channel, right? That channel, there's a pendulum swing off the high of this range. So we are sitting at a very likely area of support. Now, we do anticipate, or should I say, we almost hope for a deeper pullback to give us a better risk-reward ratio, but you never know, right? Maybe we don't get that deep pullback. How would I buy at a support level below the range without a very deep pullback? If you're taking my free trading course right now, I talk about what's called traps and how traps are the best way to buy relatively high, right? We're bullish, but again, we're running into overhead resistance. So if we don't see this deep pullback, if we start to kind of grind off the low of this channel, the low of this channel, what I do is I want to try to buy as low as I can can, and you'll know this setup if you've taken the free trading course, right? These are called bear traps. Ultimately, you want to trap the bears in, right? Let them try a couple times, right? Imagine the bears coming in and trying to sell a couple times here. That's going to give us now their stops. And then what we'll do is we're going to try to use their stops, right? If you're a seller and you're trying here to sell this thing short, right? Now remember, just because we want a deep pullback doesn't necessarily mean we're going to get it or we can sell this thing short, right? So if the bears try a few times, if I can get, this is the key, you want to buy as low as you can here. And again, this is where you want to look for a trap setup. Just like we talk about in the free video series, right? Targets, back up to retest the high. And I'm going to talk about breakouts, right? Going higher here in a moment. That is one way to buy a not so deep pullback. Very much a good trade idea, right? Because you have the channel coming up below us. My favorite trade, like I said, is to get a bit of a deeper pullback here. Now, deeper pullbacks are great, but with a deep pullback comes what? Comes momentum. There's no free lunch in trading. Deep pullbacks are great because you can take a small amount of risk for a big amount of reward. But the problem now is as this thing, as it pulls back nice and deep, the bears are probably going to, they're not going to give up without a fight. So this is where what I call a two-try failure pattern, right? We learn a lot about what we call failure patterns, right? Inside of the free trading course, right? So you want a failure pattern, but because the pattern is such a deep pullback here, you want to let them try twice. I use the two-try rule a lot because what you're doing is you're trying to get as many sellers trapped in below that 21 moving average and then use their stops as fuel. Now, one little tip about these. The target, of course, is to go back up and retest the high, right? The target is to run those stops, right? Using a failure pattern, fake out breakout of that range. And then remember, as we go higher, a lot of times this thing really will race and run higher. And this is where you can grab another entry. But what's the challenge though? The challenge is as we race higher, now where am I? I'm too high now. And what's the best way to buy when you're too high to buy or you're high up, right, compared to those highs now? Traps, right? So this is a very common scenario that we see in our morning trade room. We get those deep pullbacks, right? Trap the bears in below the moving average, use their stops as fuel on that fake out breakout. And then one of my favorite follow-up trades is on the way back to retest the high here. Now we grab that bear trap, right? Strong move up, shallow pullback, higher high in price. We talk about this stuff, right, in the free trading course. Which reminds me, I know that most of you guys watching right now have taken my free trading classes. You've learned failures, trap setups, using stops as fuel. It's one of my favorite ways to trade. But if you're watching for the first time right now, if you're one of the few folks who haven't taken that free class and learned all these entry tactics, I'll put a link up here for you in the upper right hand corner. Grab that link and take that free trading course, because I'll tell you, the strategy I teach in that free video series will show you a stupidly simple trick to know exactly where the best winning trades will be each day. And to make it easy, I'll show you my 4 favorite entry patterns to help you start making money on your own. If you're missing the best trades each day, if you're tired of taking so many losses, definitely grab the link up top there. Take the free course, and that way you'll learn more about how to find levels of support, how to trap the bears in and squeeze them, right, for those runs going higher. Now, I have 4 different variations, right? Those are 2 of them. Let's talk about 2 more right now. And again, I am going to talk about breakouts going higher. We're going to get to that here in a moment. One more variation that you have to be prepared for is a V bottom. We have made a very big move over the past few, basically Thursday into last Friday. You can assume there are a lot of buyers waiting down in these areas. If we see a strong shot going here overnight or tomorrow morning at some point, there could be so many buyers down here, we may just slingshot or V-bottom right back up again. If that happens, the key is going to be, don't chase it. And what you want to look for is we almost always get one of these. If it V-bottoms, it'll almost always start to grind and run higher. These can be very difficult on our emotions because you're waiting for a pullback, you're waiting for the chance to buy into stops, but we don't get it, right? And the market kind of just V bottoms and begins to grind. Then all of a sudden, you know what? FOMO creeps in, right? And you start going, crap, I'm going to miss this move, going back to the high, and what happens? You talk yourself into jumping in right up here. The problem is at that point now, you're buying really, really high, okay? Your risk is here and your reward is here, okay? Not good, okay? We got to get that more balanced. And the way you get that balanced, and by the way, why is a balanced risk reward? Why is it good? Why is it important? Because when you are risking small to earn large, you by default put yourself in the shoes or on the side of the other smart money in the market. They're the ones that move these markets around. If you buy high like this, you're buying with rookies. This is where buyers who got in at the right locations are getting out for a profit, right? You're literally filling their targets as you go higher. So how do we correct this? How do we avoid this lopsided risk-reward ratio? We look for traps, right? We look for ways to then go in and grab traps below prior swings. Usually what happens is you'll find a channel, draw it off the high, bring it down off that low, and that will usually that'll usually tell you where you have a good entry. Okay, I call these V bottoms or pop and grinds in our trade room. It'll pop up, it'll grind higher, draw that trend line nice and tight off the highs, bring it down off that low, and now think about your risk reward ratio. Here's your risk, right? Here's your reward. Looks better now, right? See, this is where experienced traders are looking. They're always making that kind of calculation. What's my risk here right now? What's my reward on this? You want to try to get that as low as you can. And like I mentioned earlier, traps are always going to be, right, your best bet. You can see an example of this back here, right, where they V bottom off of that low. They begin grinding. Look where they come back, right below that low, right where buyers come in and whack it. That is one or two ticks below the low. Trap patterns, right? Traps are the way you want to look for this if it V bottoms off of that low. Now, I've got one more here. And this one is, let's talk about it. Sometimes we make a strong move down, right? If we do get that strong move down, sometimes what happens is the strength of that move lower, they'll roll over and they'll actually retest that low. Right? A lot of times they'll do this, right? It'll pull back. The bears will try once. The bears will try twice, and they won't fail, right? They won't fail and snap back higher. No, they'll actually succeed and retest that low. We call this mission accomplished. Remember, anytime we see a strong move in one direction, we expect a retest of that level. That's why we give them two tries. That's why we give them the benefit of the doubt on that, right? So if they do go back and retest that low now, think about what happens at that low. The sellers who came in and sold high, kind of the smart money, if you will, right? They're now taking profit at the low. So once those bears start peeling out of their position, who is coming in to sell down here? Rookies, right? Once again, FOMO traders coming in. This is where you can easily trap rookies, inexperienced traders with small stops, unable to protect themselves. You can trap them in now. Again, at this point, it will feel very bearish on the faster time frame. We're not trading off an 8,000 tick chart, right? You'll learn that in that free video course. What I want to do though is start to get some of these rookies coming in and look for them to try twice. Once on the pullback, higher high, twice on the pullback. And again, the reason we look for two tries here is because we're trying to load up on those stops, because the stops are going to be the fuel you need to punch this thing right back up in the opposite direction. One of my favorite trades on this, we call these double bottom reversals in our trade room. Once those bears are roped in, we get that nice juicy signal candle you guys are learning about in the free video course. And then oftentimes, as it runs higher, you're going to get a new channel off the high, find off that low, and then any of the entry patterns you can grab off the low of that channel. All right, it could be a trap setup, it could be a seller failure pattern, a pullback combo. They all work, right? They all work just fine. But the key though is if they retest that low, this is not a reversal. This is not a bear market now, right? It's simply a retest of the low. We're still very much a bull market. Trap those bears in, use stops as fuel, and then if we start seeing that punch going higher there, right? Draw that trend line right off those highs, right? High to high, down off that low. And then I always tell my students, you may not have the confidence to take that failure, but you have to find a way in off the first test, off the low of that new channel, because next stop at that point is probably going to be a retest of the high. That is a great risk reward ratio. And that's of course why we're hoping for that deep pullback. Now, if all hell breaks loose, right? We drop off the highs here, we hold that pullback, and we start to jam, right? Going lower. If they rip this thing going lower, it seems very unlikely right now. That would be the sign of a reversal, and we'll have to game plan that tomorrow morning in our trade room. I can't cover everything here in these videos here right now, but those are the 4 variations of that pullback. Now, the next thing is what if this thing takes off to the upside, right? What if we keep going higher? Like I mentioned earlier, it's a bull market here into a trading range. So, okay, we talked about trapping the bears in, but what's a breakout look like, right? What does a breakout look like? And could I sell off the high of that range? Let's talk about this now over on the Nasdaq, right? The Nasdaq and the S&P are quite similar right now. Really, for the most part, there are 2 basic principles or 2 basic fundamentals in play right now on the NASDAQ. One is this bullish move into a trading range. Okay, ranges, of course, act like magnets. A bullish range tells us to find support levels. There's no shortage of support levels. And just like on the S&P, we'd like to get that nice deep pullback, trap the bears in. We've talked about those 4 different variations: shallow pullbacks, deep pullbacks, V bottoms, right? Double bottoms. Okay, so now we know kind of how to do that. The big question though now is, the NASDAQ, right, second component, is right at major highs. And so we do anticipate maybe a bit of a sharper pullback than we normally get, right? So all the same fundamentals that we had on the S&P. NASDAQ I could easily see this thing trapping low, trap the bears in, fake out breakout off the low, and ripping here into some big earnings we have coming later on in the week this week. So let's talk about what breakouts look like. Now, the big kind of giveaway right now on the NASDAQ is if we can break through this, 348 3/4, we have just a ton of, look at this, it's still going, right? We don't hit anything really decent until we see 14,058. So 14,000 is kind of baked into this thing if we break out. Now, I wouldn't go counting on 14,000 tomorrow, but whenever we have a lot of open space up here, this is ripe for a breakout. And so we know that we have that range. Again, my favorite trade is a deep pullback right now, right? But like I said earlier, you never know what you're going to get. So let's get ready for a couple different scenarios. For the most part, there are 3 different scenarios that you want to be aware of with a breakout. One of them is the most aggressive. It's also the most fun. It's called a Two Breakout. So let's say, for example, we don't get that pullback. The market opens up and this thing just blasts, right? And just rips and runs higher. If we see a strong move in one direction, a shallow pullback to the moving average, and a higher high in price, very good chance here we see buyers coming in looking for a trap. Okay, we call these 2 try breakouts or a 2 try trap. If you're with me in the morning trade room, the goal of this is we have to take out that high with some serious strength, strong move in one direction, shallow pullback that will drive the buyers crazy. The higher high in price will confirm it's not a V-top, right? And back into that trading range, it could be, and we'll talk about how to short this thing here in a moment. Don't you worry. But that is the first breakout pattern. The next one is called a pop and grind. Now, we talked about this one briefly before. If we can take out these highs, we may not rip the face off the highs, right? It may pop and begin to grind going higher, right? These grinders are a little bit difficult because they make it feel like it's they make you second guess it, right? But once it grinds like this, you know that grind, all that is all the bears who sold short over here, right? They're getting stopped out, and that fluttering is causing the market to go higher. Whenever we see a pop up and a grind higher, it'll separate off that moving average. These are super easy. Just simply draw a trend line off the highs, nice and tight off the highs, bring it down to that low, and then repeat after me. Look left, find prior swings, and you want that first test. The first test is the best test on these ones. Okay, this could be a trap like I'm showing you right now. It could be a seller failure below the moving average. It could be a pullback combination, right? We learn about these. We call this the price action cycle in the video course, right? Now, one thing about these is the breakout leg, okay? The first leg, the breakout leg, is the measuring leg. Okay, so once you know the size of that breakout leg, then you know once you get that pullback off the low of that channel, now you know how big that leg is. You know, we don't have anything really until 14,000, right? So we've got to kind of use these breakout patterns to give us an idea of where those targets are. All right, guys, so be aware of that breakout leg, measuring leg. And again, this could be a trap, it could be a failure, a pullback combo, it could be a strength trade, same stuff you guys are learning in the free trading course. All right, last but not least, the third breakout pattern I'm watching for tomorrow is what we call a 1, 2, 3 breakout. These are very, very simple. We need to take out these highs. We could pull back to the moving average, and the buyers need to show us they are looking for more. Now, I'm not going to buy that first pullback because you're buying right into resistance with a range below us. Not a highly reliable trade. Okay, you're more than welcome to do it if you want to, but you're playing with fire, right? They oftentimes will fail. The range is a magnet. So I always wait for that breakout to hold. And if they can jump off that moving average, now we have what's called a 1, 2, 3 move. Okay, now if you're a student of mine in my trade room, you know 1, 2, 3 moves are one of the biggest clues we get. So you can do at this point now is you can draw a trend line off those highs. I always go down to those big lows, bring that channel off of that low, and then again, look left, find some prior swings, right? Find some prior swing lows, find some prior swing highs. That will give you kind of the sweet spot to find the entry. Make sense? It's just a matter of time now. Wait for the pullback, get that trap, get that failure, get that pullback combo. Obviously, you'll see more examples of this in the free trading course, but any of the entry patterns off the low of that channel. And again, you know, like I mentioned before, that first leg is the measuring leg. Okay, the first leg and third leg are usually symmetrical. Okay, by knowing that first leg, third leg, right? Trends love threes, first leg, second leg, third leg. By knowing first leg, third leg, you really get, for me at least, I get a lot more confidence in letting trades run, knowing how far the market is likely to go there. That is, of course, my third way where I trade that breakout. What would be the safest way to sell it, right? What if we went up to this high? How would you sell it? You would need to get what's called a crown reversal pattern. Crown reversals in bull markets like these, you have to expect there could be a channel, right, coming up at this low. So you've really got to be careful trying to sell off the high, even with overhead resistance in a bull market. The key is we need two things. One, we need to run the stops of the buyers because we'll need some fuel to turn this thing around, right? Trying to sell the high like this is dangerous because all the momentum is bullish, right? So I need to rope in some buyers and use their stops as fuel. To do that, we have to use the 2-try rule. You know, like I mentioned earlier, we need as many people on the wrong side of it to get those stops run. The second part of it is because of the way this thing is tilted higher, you have to anticipate some channels, right? And so I'm concerned now, if I try to sell off the high, I'm concerned I am walking right into a bear trap, right, for that blitz going higher here. So because of that, I have to make sure, guys, I am selling as high as I possibly can. Remember, we mentioned this earlier, right? If your goal is to sell high, traps are going to be the name of the game. If your goal is to buy low, traps are going to be the name of the game down bottom, right? This is the exact same idea. It's just flipped around in the opposite direction there, all right? This is called a crown reversal. We take out that high. The buyers are prematurely buying here. Again, I don't like this buy off that pullback. I would rather wait for the buyers to try a couple times. If they're successful, perfect, then we can go out and trade a much more reliable entry off the low of that channel. Right? It's much more reliable than trying to go pick that breakout pullback, right? That's a 30% trade, right? This is more of an 80% trade, right? Which one do you want to build your career on? You can make the decision for yourself, right? You're not going to make it very far trading 30% trades all day. So if we get up around these highs, the buyers try once, twice, okay, then comes my 2 tries for the buyers. I have the stops that I need, right, to fuel this reversal going lower because I'm going against momentum. And I also know that because of the situation we're in right now, I cannot sell low because as we go lower, I could be walking right into a bear trap. And so with a crown reversal, basically it's a bull trap entry. Right? With that crown reversal pattern, now by the time we end up down around key support levels, you've already got a big chunk of profit in that trade. Your stop is now down to point of entry. If it keeps going, it's a huge home run winner. And if it doesn't, okay, you gave it a shot. Make a small amount of profit on it, right, and let it rip and keep going higher, right? That's the safest way to sell in an overall bull market. Does that make sense, guys? Let me know what you think, right? Am I crazy about that crown reversal? I'd love to know your opinion. Hashtag Lightbulb Moment, down in the comments section. I know a lot of you guys are learning this stuff for the first time right now, so hopefully this is kind of opening your eyes to how to use momentum correctly along with stop runs. Anyways, okay, so NASDAQ is set to go. S&P is to go. I am running late on the video tonight. I've been too busy talking about there's a lot of game planning to do on the E-minis. Last but not least here, over on oil, I will try not to go too late here for you guys. I appreciate you tuning in and watching all the way to the end. On the oil right now, I think there are 2 main factors on the oil. One is the overall bear bias right now. You go down the description and you will see we are very bearish here on that 60-minute chart. The second thing is if you were here last week we talked about this big move down into a trading range. And whenever we see ranges, what do? What do we expect? We expect there to be a pullback. This, of course, was that breakout pullback we talked about last week. If you watched last week's video, we talked about how we assumed that there'd be a lot of sellers in and around the 76, 80 area, right? Because that was the underbelly of the previous range. We talked about this last Thursday night into Friday, and boy, was it ever, right? It definitely was. You can easily see the bears came in, and they just simply clocked it. The challenge, though, is that what should have happened? We should have gone back into that range and kept going, right? If you understand the idea we talked about earlier, if we have a bear market into a trading range, we should be going up and then coming back down and breaking through the low of that range. This is clearly not happening right now, right? Obviously failing. And so in my eyes right now, that breakout pullback is struggling at this point. And now you look at it, you go, okay, well, listen, this is a very strong move for the buyers. This now begins to feel like a breakout pullback against the sellers now, right? Anytime we see a strong move in one direction, we know that in this case, the buyers are hunting for a retest of that high. If we go higher right now we have some big problems for the bears. There's a rising support trend line. All the momentum now shifts for the buyers. There's a great chance here for a bull breakout. And really, for the most part, it's more the sellers. The bears, at this point, the bears are walking on thin ice. What are they going to do? Go lower? Are they going to sell down here? No. Horrible place to be a seller here. Horrible place to be a seller here. You really can't find a good place to short this market anymore, okay? And oftentimes that starts to build into giving the buyers the window they need. Now the big question is, right, just because the bears are they've really put themselves in a very challenging spot right now, does not necessarily mean the buyers will take this, right? We've seen signs of exhaustion oil, the economic slowdown, recession lights, flashing. We heard from the ISM manufacturing today, signs of stagnation, right? Slowdown along with price increases. So that doesn't mean the buyers will grab this, but it definitely does mean, though, that right now, because the bears have a lack of really options right now, my favorite trade on this is going to be a fake out break of the low. I would love to see us take out this low, trap in some of these bears, because again, there is no edge. The bears have no edge in selling down here. They might be successful, right? They may hold it and keep going lower, but there's simply no edge down there for the bears, right? As we go lower, the risk-reward ratio here gets even worse for the bears. So I'd like to see if we can trap some rookies in. My favorite trade is the fake out break of the low. Now remember, it's an overall bear market, so I'm going to use the 2-try rule. Let those bears try a couple times and then try to light those stops up back in, right? Range above is a magnet. We are sitting on 4-hour support right now. So I like that fake out breakout off the low there. It's 2 tries and the reversal back up again. Now, obviously, again, bear market, if we take out those lows, if we hold that pullback and we jump right off that moving average, this is one of those 1, 2, 3 breakouts. We talked about this a few moments ago on the Nasdaq. This is simply the opposite direction now, right? Again, I'm not going to sell that first pullback, but if they hold and they really accelerate off that moving average, okay, now we are probably hunting for, I've got 71.58, which looks like the next logical stop for the bears here. If, that's a very big if right now, if they can take out the lows, if they can hold that pullback and jump running lower, again, big if right now, but if they do, we'll mark those lows, we'll mark those highs, and like I always say, right, don't miss that first test, right? Any of the entry patterns we can find off the high of that channel. Okay, and again, we have a pretty good idea, right? 71.51, 71.50 area. Looks to be a very reasonable spot for a big objective, right? This could also be a breakdown, a grind, going lower, a pop and grind channel could also work as well, right? So I'm not opposed to being a seller, but I want to see some proof first, right? Because this area down here is not looking very easy to be a seller here. But hey, again, if the buyers are simply not interested right now, if it rolls over and keeps going lower, eventually I have to going to bite the bullet here and go, okay, we're trending lower now, and we'll try to grab that short off the high of that channel. As we go higher, what's the best way to buy this? What's my concern? My concern is I don't want to buy too high. So if we anticipate this move trying to go higher and retest the high, what's the best way to buy it? Traps. Right? So as we go higher, and we talked this quite a bit so far, right? Trap patterns as we go back up to retest the high. It's the only way to do it. It's the only way to do it because it's the only way to buy as low as you can to give yourself a decent risk-reward ratio on the way back up, right? If they were to retest this high, hold that pullback, and begin to jump to those highs, okay, now it's on, right? Now we know we're probably going back to, it looks like 79-ish, right? 79 and change up there. That would be the objective if we go higher, but they have to break out. They have to hold that pullback. They have to jump off that moving average, right? Or get that pop and grind, right? Like I mentioned earlier, find that channel, right? And then get that long, right, off the low of that channel, all right? So in the short term, it's traps on the way up. If they hold that pullback off the high and they accelerate, this is kind of what you'd expect, right? In this scenario right now. But again, the question is will the buyers actually step in and take it? There's a lot of fundamentals right now that suggest they probably won't. If we take out this high, how would I sell it? You know this. What's the concern? The concern is momentum. What's the concern? The concern is a rising support trend line. If I want to sell off the high, what do I need? Again, to go against momentum, I need 2 tries from the buyers. Why? Because momentum is so strong. I need to get some stops as fuel. The big problem, though, is this rising support trend line. This is where crown reversals come in, right? You know this, again, right? I'm trying to turn this thing back over. It is an overall bear market, right? So I'm okay with this trade. I don't this I would think is my second favorite trade, right? I love the idea of the fake out breakout off the low, right? But this would be a close second place, right? Take out that high, trap in some of these eager buyers. Again, this is not a bull market, right? There's nothing about this market right now that's bullish. It may change tomorrow, but that crown reversal giving us that 2 try for the buyers and a bull trap. That's the way you get short in a situation like this. All right, guys? Boy, what a great video here tonight. I'm getting excited about tomorrow. Just game planning here with you guys. Hope you learned a bunch. If you got any questions, hit me up in the comment section below. We'll wrap this thing up, though. Thank you so much for watching all the way to the end. Now we have a game plan for tomorrow. Don't forget, we're going to trade this stuff together tomorrow morning, 8 o'clock Eastern time in our members trade room. Tomorrow morning, of course, every morning at the opening bell. If you need any more information about the free classes, membership courses, trade room membership, or anything we talked about, all the links are down in the description of the video. And if you have trouble getting in, if you have questions, don't be afraid to call the office or use live chat. We'll be here to help out if you have questions on the way. All right, guys. Hope you learned a bunch tonight. Hope you use this knowledge to earn a bunch tomorrow. Hopefully, I'll see you sometime soon in our members trade room. In the meantime, be well. Be nice to each other out there tomorrow. And be here next time. Adios, amigos. Bye-bye for now.